21st November, Monday, MAO with Cal. Guys, when the Michaels are saying the same thing, what do you think you will do? Apparently today is a blockbuster video. You don't want to miss this because I have compiled 3 of them. They are basically their forecast, their view right in one single video. This is really something you don't want to miss it. And of course, if you want to hear more of this as well, the more information, remember to sign up for my upcoming preview that's coming on 26th of November. This is going to be big, okay? Let's go in it right now. Now, before we start this again, please make sure that risk assessment is very important. Make sure you do your conditioning and of course, take care of your trading. And thank you, Ames, for the kind sponsorship. Now let's talk about Amazon first. Do you know that Amazon has started firing 10,000 employees? Now, of course, with the base of 1.6 million employees around the whole world, 10,000 is nothing. But you must understand, in 2019, this company basically has about 800,000 employees. Then, because of the sudden increment, because of the job needed and so-called job expansion, the STEMI checks, the whole employment of Amazon hit 1.6 million people, okay? No kidding. So still, you may ask, then what's a big deal this? Now, this company has lost its market share since the start of this year, which was trading at about 180, all the way, it began down all the way to 97. So it lost about $80, which is about 45%, okay, in one single year itself. Now, this is no joking matter, all right? So this company has just lost $1 trillion in market value. And that's not only company, because there are more companies losing that. Like Microsoft too. Microsoft has lost a lot of money, almost 1 trillion too. It has lost $889 billion in value just this year alone. So what is this all trying to say? Well, the economy is really not doing well. Let's talk about Target. Now, Target is the so-called higher end, what they call supermarket compared to this, the Giant and all these like Walmart. But the thing is this company warns of the soft holiday quarter. That is very interesting, because usually holiday quarter we should have higher numbers, but instead no, because profit tumbles and sales are slow. No, the thing is this: the profit has fell by 50% in the fiscal third year as it cleared through unwanted inventories and sales slow heading into the holiday. That is something really unexpected. But what I'll tell you is this, okay? Look here. Apparently, Target is seeing a higher level of shoplifting, which has jumped about 50% over year. So this losses has already amounted to about $400 million impact on the Target margin. Now, not too sure whether these figures are being inflated, but the point is this comes from organized retail theft. So why would people go for shoplifting if the economy is doing well? Why would people be cutting jobs if the economy is doing well? Why would be profits coming down when the economy is doing well? So all these questions are very critical and very important, and that is why we need to understand simple economic 101. Now, if inflation is moving up in this movement, okay, just a hypothesis, then and wages doesn't really follow, that will equivalent to the loss of purchasing power. And when purchasing power basically reduce and prices keep on increasing, people who have no credits or no other way, they will basically engage into some of petty theft, and that is the reason why things are happening. And again, I want to remind you that this is happening in US, and would it spread across whole world? Well, let's revisit some simple economic 101. Now, recently we can see that the option trading in the market has exploded, all right, in November itself. Now, why is that so? It's done from Bloomberg. Why? Because more and more people are actually getting basically betting on the market, and I heard that in options now, they are trading not the 2 month, 3 month, 1 year time frame. Some are trading in 1 day time frame. So which means that they're turning this particular option market into a little casino, and this is actually getting very scary. So let me bring this lady, Liz Young, okay? Now, basically she says that the current S&P 500 now is trading at 17.3. Now, what's 17.3? Now, high back earlier this year, it had 24, 23, and that was where I've been reminding people that this is very, very high and likely there'll be pullback. And truth be told, the market really come off. But if you look into the real numbers, you can see right now the S&P 500 in terms of the forward PE ratio has been from 23 all the way, been gliding down all the way to today at 17.3 to 17.6. But of course, some people say that it's a good buy. Nope. If you're looking at a good buy, it'll be 13. All right. When it's happened by 13 to 13.5, these are the good price for you to engage into it. So where we are right now is still a bit far. And the thing is this, guys, if you look carefully for the last 10 to 15 years, the average is 16.4. That means that at the moment now of 17.3, we're still kind of high. But don't forget, in 2009 to now itself, right, we are having a low interest rate environment. But today, we have a much higher environment, and that is a problem. So let's continue by saying that most of the time right now, we have spent at zero rate levels. Okay, since 2010 onwards, we've been staying there. So if that is to continue itself with earning contraction and layoff coming in, she believes, and I also believe, that there will be a chance that the stock market, the economy, to actually come down. Don't you agree with that? All right, so let's us now look at what the three Michaels have to say and see whether do you buy it. Now, Michael Hunnett, he is the chief investment and strategist for Bank of America, and this is what he says. He believes that there's a bear rally fizzing out. That means that this current bear rally now is going to fizz out soon, even though there's equity inflow surge. Now, his view is pretty simple. He says that to predict a policy pivot only in June and July, that's next year, it is actually possible. If anything before that itself, it could be a huge mistake. All right, and he also mentioned that recently we do not have a +1 or -1% movement. Now, this is not a good sign, because that means that the market is kind of sideways and not too sure what to do. Now, of course, we realize this, we saw 4 dojis in a row on the Dow Jones, with something I had never seen before in my trading career. And when that happened itself, right, if we backtest this, usually gigantic movement is coming in, and that is one reason why we need to be very, very careful. Now, another guy, this is Mike Wilson for Morgan Stanley. All right, so basically he is saying that, right, the bear market will likely resume once this rally is finished. Okay, and basically his 12 months S&P bear base bull target is 3,500, 3,900, and 4,200. Okay, in short, if the market is to go down further, you'll be taking down to 3,500. Okay, the current base now is about 3,900, and the target for bull is 4,200. Basically, he's saying that we should stay defensive and stay with it. And most important thing is that right now the rally is about to be ending soon. So again, he seems to be saying about the same thing as what this earlier Michael Hunnett was saying. All right. And now we bring the guy in, the Michael Burry, the big short guy, right? So apparently Michael Burry says that the epic market crash he predicted is in full swing right now, and flags crypto, SPAC, and meme stock as early victims. Now, we already saw crypto hitting it. The next counter is next sector is SPAC, which I think is a very high chance, because these are the open checks company who really didn't perform as well for the entire year. And of course, those companies that are being pushed up by some of the investors, the retailer, will be in shock soon. So now he's saying that, right, you have no idea how short I am. Oh my God. And this is something from 15th of November, which is just a couple of days ago. All right. So for this Michael Burry, I basically compile for you how they actually forecast their downward side of the market. So this is by Bank of America at 3,400. Morgan Stanley is about 3,000, and SG, Societe Generale, they are looking at 25 to 2,600. But Michael Burry, who is expecting a halfway mark only, that means that if you talk about full, my goodness, he's predicting 1850. Now, I don't know how to put this to you. Now, I cannot see how can we go to 1850 without a pure market crash. You're telling me at 3,400, I kind of believe that this should be a very fair base figure. Anything lower than that, I think 3,000 is fine with me, and that will be an absolute darling to buy. Well, I can't see 2,600, I can't see 1850, at least for now. All right. So anyway, this is a summary of the forecast, and this is something that you probably want to keep for the worst case scenario. Kind of take note, worst case scenario. All right. Now, this is my personal view on this. Now, this is the Federal Reserve balance sheet, the one in linear, and the S&P chart. All right. This is a monthly chart. Now, we can see very clear. I shared this before to you. I want to just bring it back to you again. You can see that when times are bad, back then in the Lehman Brothers time, when the Lehman Brothers market was coming off, you can see that this was the balance sheet of this Federal Reserve increased, right? So from here itself, it went all the way up, and that's where the stock market basically bottomed out at about, for S&P 500, about 660. It went all the way, broke the high back in 2013 and even go higher here to 2000 mark. Now, of course, we also saw that when they started to really remove the balance sheet or reduce it, the stock market basically caved in. During the pandemic time, we saw the Federal Reserve increasing it, and of course, we can see the S&P follow through. Now, what is scary right now is that the S&P 500 is reacting according to the balance sheet of the Federal Reserve. So if let's say that the earnings are going bad, the contraction of the economy is happening, and their employees are being released, then of course with the Federal Reserve, if they're going to continue to reduce their balance sheet to make sure that inflation can be curbed, then it is very simple to see that there is a fair chance to see the S&P 500 coming down to 3,200. Now, why is that so? Because if you look at it, this was where it stopped temporarily on the Federal Reserve balance sheet, and then they bring it up all the way, right? So the thing is this, if we go back to where we are, then that means that 3,200 will be the target that I believe the S&P will go. Now, of course, if we go back all the way that we started, okay, then that will really go down to where Michael Burry is saying at the 1,500 area. But which again, I don't think so it will go there. To me, this figure is something that I believe is more manageable, at least in the near term. All right, what do you think, guys? Drop me a comment in the comment box as well. And don't forget, I already have left a special code inside the PowerPoint, so look out for that. Okay, all right, let's look at the market right now and see what do we have for today. Now for today, we can see this is my KFC chart, and this is at 33,031, and we can see that on this particular day, the market just blossomed all the way up. But very interesting, at this junction here, 34,000, it just have a very strong resistance here, and this is 1, 2, 3, 4, 5 doji. All right, 5 doji formation. Now by right itself, right, when the market upthrust here, I thought that we should be able to see 34,000 rather easily, but now we are seeing a bit of resistance. And crude oil price has went below $80, so I believe that this is something we must watch. Okay, if the market really choose downside, then the 33,031 will be the first base to watch out for, and this is critical. If the market loses this level, that means that it went below this upthrust movement, right? So whatever gains has been done is all given back, and usually the market may take into short selling purpose. Yeah. Now we can see from China, China has failed to stay above the 12,280 mark that I said before, and now it's testing the MA30. Now you can see that it's now ferociously fighting over here, and if the market fail to stay above this figure, then the next target is going to 11,877. So let's watch this carefully. This is going to be a turning point. If the market can stay here, this will be the next upthrust. We can see a high of 13,000 coming in. But if not, I'm so sorry, the market is going to sell again. Now let's look at the market with my TWB chart right now. Okay, wait a moment. There's a bit of here we go. Okay, here we go. This is the Dow Jones chart right now. Now Dow Jones has been basically has a new BNB right here, and we can put the 2 RL level. I'm gonna put it in just for your understanding. This is the BNB RL and SL, resistance and support. So not drawn to gauge, but roughly there. So as long as the market stays below 34,000, it's kind of resisted. But you can see the support is pretty good, right? It basically got supported 2 days ago, 2 trading days ago at this 33,300 area. So as long as the market ding dong here, we will likely get no direction. But once the market break above 34,000, 34,700 will be next. Similarly, if the market breaks below 33,300, then 32,642 will be next. All right, so this is something to take note of. In terms of indicator wise, both KSI and KRW are still kind of intact right now. Let's look at NASDAQ, shall we? Now NASDAQ has pulled below the resistance at 11,906. This is the extension, and this is the BNB RL, which has turned to become a support, right? So as long as the market stays above the BNB RL, which is at 11,263, this will still act as a support. But if the market really finally cave in, which was today, the pivot to is 11,597, which is in line very nearby to the BNB RL level, then the market may back all the way to MA30, and that's 11,395. Now, of course, if the market can go back above MLP, then the first target will be 11,833. For the S&P 500, let's take a look right now. S&P 500 is also doing the same thing, is staying right above the BNB SL level at 39.54. Now this 39.54 have been tested for 4 times already, so which means that the market is taking this number very seriously. If the market stays supported, it should be able to go back up to the BNB RL level, and that is about 4046. But if they fail and breaks below the BNB SL level together with the P2 for today, then who knows, we may even see a 38.64, which is kind of a big drop here. I don't think it may happen today, but why not, right? Anything can happen in the stock market right now with all the heavy option trading in the market. All right, let's look at the other market right now with the Hang Seng. Okay, there's a bit of a technical issue here. Let me just correct this. Apology on that. Okay, this is Hang Seng right now. Now this is Hang Seng, and we can see that Hang Seng, ever since it broke above the BNB RL level, it shot up all the way. But it had created a very artificial resistance at about 18,500 area. Okay, so now because of that, today Hang Seng opens below the pivot 2 level. By right, once it opens, you sell, and the market did come off 200 points from the opening bell. So now it is now fidgeting around this area. The first support will be 16,772. Now at the moment, both indicators are still kind of positive. That's why the market, even though it's pulling back down, is seemingly kind of resisted. Yeah, so traders, you need to watch out for that. Okay, having a bit of issue with my indicator today. I'm gonna skip this. Okay, let me go down to the gold market. Just give me a moment. There we go. All right, so for the gold market, well, the US dollar, in my opinion, is rising up. You can take a look right now. The US dollar, and change this to the day chart. Okay, take away this balance sheet off here. All right, now this is the US dollar, and I've been telling you guys to look at it for buy. A couple of days ago, I already tell you guys that 105.65 was a good level to buy. That was here, and now it's already 107.37. So congratulations to those who have followed through with the Cal I'll follow you Telegram group. Now, if you want to join us, do contact us through Facebook. Yep. Okay, so my view is that the market should be able to test 107.80 soon. That will be the first resistance. I suspect there will be some profit taking around this area, so traders take note. But if the market can stay above the 107.80 zone, 85 to be precise, then the next target will be all the way to 110. Now this is a big move here, and that will basically pressure down the gold market, pressurize the stock market, and this will be kind of important. So watch out for 107.80. I suspect there will be some profit taking at this point here. So traders, you can consider to do some profit taking and shift your stop loss higher to make sure it's a sure win trade. All right. Okay, so that is the US dollar, and of course, to bring you back a little bit on the 10-year yield, you can see that 10-year yield didn't come down to the level that I mentioned, which is 38. Didn't come down to this point, 3.65. So it's moving a bit higher right now. This morning gapped down a little bit, but I believe that this should push it up again to all the way to this 3.895 area. All right, traders, do watch out for this. Okay, let's come back to the chart right now. So if that is going to happen, then the gold will be watch this. 1741 is a support level. If the gold breaks below the pivot 2, then the selling could bring the gold price all the way down to the RL level, and that's 1717 range. Okay, so traders, watch out for this. All right, let's look at the silver market for now. Silver has pulled back below $21 this morning, and this is like going to be testing the 20.65 P2, which I think that the market will break below because the KSI has already turned red. So if the market pulls down further, we can see it coming down to $20 for the silver, and that will be a good price for you to consider looking at it. If you want to feel much safer, then go for 19.20 level, 19.20 level. All right, let's go and cover up with the last two, which is the Bitcoin and Ethereum. Let's go here. Okay, I think we need to do some adjustment here. Yep, here we go. Now for Bitcoin, I still believe that Bitcoin is going to come down. Now because of the last one happened last 2 days, we have a new BNB right now. 17,400 is the first BNB RL level. The support itself, it will be at the 16,200 level, and the support will be at 15,600. Now earlier we did have a BNB that target 14,000. I'm going to leave it just there because I believe that eventually there is a good chance for the Bitcoin to come down to 14,500 area. I'm kind of positive that this will happen. All right, it's just a matter of time. We just have to let it go slowly. And of course, Ethereum is now mounting downwards, and there's a good chance that Ethereum could be coming down to 1,033 level, because now he has just technically touched the BNB support level, which is created by yesterday's new BNB. So overall, in my opinion, is that the US dollar will climb up again. The market will focus back on the 10-year and 2-year yield inversion, and of course with what I just shared itself, the 3 Michaels. So think about this and consider to join this upcoming preview on the 26th of November. More than 100 people have joined in. All right, so register for it right now. I'll see you on Saturday. This is Kel signing off. Have a great day. Bye bye.